Good afternoon. Hope you're having a great time. Today was an interesting day on the stock market. We started off green, like really green, but look at this map right here. Energy held up, utilities held up, industrials held up, but the rest of the market, it just decided to go red, and it did it fast. It was a rejection as clear as rejections get. Bitcoin got up to 22,000 and it took a breather off the 22,000 line. That's the critical line for Bitcoin. The yields continued to climb. I mean, all in all, it was as clear as a rejection as you could see if you're a bear. But if you're a bull, what you're seeing is momentum building up for more upside. I know that it sounds a little crazy for me to be saying that there's momentum building up when the stock market has been demolished as much as it has this year. But last week we clearly saw a bear trap on Thursday and Friday where the market comes down really hard. You get a lot of bears jumping in, and then all of a sudden we turn up and trap a lot of them. And it seems that if you weren't paying attention and you didn't realize that we were pretty close to resistance or pretty close to the top of the trend line today, and you were a bull, you probably got caught in that downturn as well. The support and resistance lines are pretty clear. The options market's telling us that we're going to stay between 390 and 380. Rough estimates somewhere around there, and that's based on the volatility index. But ironically enough, we do have that 50-day moving average at 391.81, which would serve as a second line of resistance. And then we do have the 20-day moving average, which we bounced off of today. And it is positively sloping at 380 area, 380.76. It is a positively sloping area. Now we do have a gap that needs to get filled right below that at 379. But we also have a gap above us at 401.44 that needs to get filled. And we do have a gap below us at 369.19. With none of that am I telling you tomorrow is going to be green or red. Tomorrow is turnaround Tuesday. Whichever direction the market opens, do expect it to flip in the middle of the day, because that's what we have been doing every Tuesday for about 2 months now. July tends to be bullish the first half of the year, the first half of the month, and we already finished more than the first half of the month. The second half of the month tends to be a decline in midterm election years. August does tend to be better in midterm election years than in regular years, and you see that right here. But I wouldn't get overly bearish with this chart right here, showing that July should be negative for the rest of July. It just seems to me like when you look at it, there's a couple of signs. Let's flip over to the Nasdaq real quick and I'll show you what I'm talking about. You have a bull scenario and you have a bear scenario, and you have to be willing to understand both scenarios and be willing to play both scenarios. We have a triple top forming where we got rejected, rejected, rejected. A triple top is followed by a further decline, which would be new lows of years. But a triple top isn't developed, it's not confirmed until it breaks the neckline down here, right around that 280 QQQ area. But if it does get down to the 280 area right here, you also have a triple bottom. A triple bottom would lead to new highs. 1, 2, 3. That would lead to new highs. A sign of a triple top is right there. Clearly, there's a gap right there that needs to get filled. That's the breakdown candle, and we've been trying to fill that breakdown candle and have failed to fill that breakdown candle. But it's not a triple top until it breaks the neckline down here. It's not a triple bottom until it breaks the neckline up here. But one sign that you clearly see that it's a triple bottom is, or one sign that you could clearly see that it's forming a triple bottom, is the decreasing volume. Every time you see red volume, every time you see selling volume, it keeps getting less. And you see over here, all this red volume, next leg down, less volume, next leg down, less volume, next leg down, less volume. Every time you see this decreasing volume, that means the bears are starting to get exhausted. You're starting to see the bears just, they're tired of selling. They don't want to play this game anymore, or they're getting scared, one or the other. But you have a low, a higher low, a higher low. That's signs that the bulls are starting to buy these dips. And when the bulls start buying these dips, the bears start getting scared because stocks go up. That's why. We all know that the majority of plays are played to the upside, and the bears know that. And they joined the party today. That was a clear resistance line. They won today, but here's the 20-day moving average right there. On the SPY, we bounced right off that 20-day moving average right there. Bounced right off of it. Those 20-day moving averages were working as resistance, and we went over it. Now it's support. Let's see if we can keep it that way. With the declining volume, with the positive divergence, with the breaking of the trend line, with the positively sloping 20-day moving average, this chart, believe it or not, looks a little bit bullish, a little bit more bullish than it does bearish to me. But you have to remember, this is a midterm election year, and in midterm election years, we are in July, right around here, and the low of the year in midterm election years doesn't come until the second half of the year. That's why I have been saying I'm not too bullish, I'm not too bearish. You get these little wedges right here, and all that means is that we're gonna go sideways. We're gonna go sideways for another month or two until the market decides whether we're gonna make the new low or we're gonna make the new high. I don't expect big moves on SPY over 400. I don't expect a big move on SPY under 375-ish until September, October. I did want to point out Apple. Apple had bad news today, or it had some news. Ironically, it came out right at this level where it needed to break this neckline in order to be bullish. It got rejected off that neckline, but it is forming a nice inverse head and shoulders. The 20-day moving average is positively sloping. These are the type of charts that I have been telling you guys on the Discord that you need to enter these kind of positions. Not just because it's Apple, but because you have a low, a higher low, a higher low. You clearly have an uptrending channel. You have the positively sloping 20-day moving average. You have a clear neckline that you have to break. Once it breaks this neckline, then Apple looks very bullish and all-time highs are right around the corner. Seasonality is a little bit strange, and I've been talking a lot about seasonality, especially in midterm election years. Well, look at what Apple does in midterm election years. August, it goes gangbusters. Ironic that, or coincidence that Nancy Pelosi bought some Apple contracts? I don't think it's a coincidence. But you can't look too far away, just because I do think that there's some bullishness coming into the market. You can't keep your eyes off of the news. And when you see the news, looming gas crunch poses historic test for Europe. Global oil supply crisis shows signs of easing. Well, when they're saying gas prices are coming down 24 days straight right here, 24 days of declining gas prices means the economy is slowing down. Lumber futures are getting a makeover. Lumber prices are getting destroyed. That's a sign of the economy weakening. Copper slide signals mountain recession concern. Just headline after headline after headline after headline is recession worries. Everybody's worried about the recession. Everybody's worried that there is going to be a recession. And when a lot of people worry about a recession, you get these big red. big red days, because everybody gets skittish, everybody gets worried. People want to buy the dip, but you could see here they don't want to hold on to the rip. Until we start getting people holding on to the rip, then we're more bearish than bullish. So even though I am bullish, as far as thinking that this chart has a little bit more upside than downside, it's still a downtrend, it's still a bear market, and I'm still gonna sell the rip because I'm not gonna get caught on today's downturn. That was terrible. Look at it on the 15-minute chart. Look at that. Wow. And we still have a gap to fill right there. Don't get caught in these moves. Enter and exit. Be quick, be nimble. Let everybody know what you're doing. We'll tell you if we agree with what you're doing, and we'll give you advice on whether you should buy or sell, because a lot of times you want to think that you're right and you want to know that you're right, but you're wrong, and you should just take small profits and take small losses, and try to make more wins than losses, and you'll end up having a good year. With that, have a good night. Hope this helps you out. If it does, give it a thumbs up. Make sure you share it with your friends. Subscribe to the channel, and we'll see you on the Discord. Have a great day.